Today, we're learning about Bitcoin Perpetual Swaps and Perpetual Swaps DEX. If these terms sound confusing, don't worry, I'll explain them using simple examples. Let's get started. What are perpetual swaps? Bitcoin perpetual swaps are a type of agreement or contract that lets people bet on whether the price of Bitcoin BTC will go up or down without owning the asset. Unlike traditional futures contracts, perpetual swaps do not have an expiration date, meaning traders can hold their positions indefinitely. You don't actually have to buy Bitcoin to make this bet. It's like betting on the outcome of a game without owning the teams. To explain Bitcoin perpetual swaps, let's start with the idea of a bet. Imagine two friends, John and Mary, who want to place a bet on the price of Bitcoin. John thinks the price will go up and Mary thinks it will go down. Instead of just waiting to see what happens, they create an agreement that says, if the price goes up, John gets money, and if the price goes down, Mary gets money. This is similar to a futures contract. It's an agreement to bet on the future price of something. But here's the twist. With perpetual swaps, there's no expiration date for this bet. They can keep this bet going as long as they want, without having to close it at a specific time like a traditional futures contract. This is why it's called perpetual. The contract doesn't expire. Another example. Imagine you're watching a football game. You don't own any of the teams, but you bet that team A will win. If they win, you make money based on your bet. If they lose, you lose your bet amount. With Bitcoin perpetual swaps, you're doing something similar. You're making a bet on the price of Bitcoin without actually buying it. This way, you can try to profit from Bitcoin's price changes without needing to own any Bitcoin directly. Think of perpetual swaps like an infinite bet on the price of Bitcoin. Imagine you and a friend place a bet on who will win the next soccer match, but the game never ends. The score keeps changing and you can bet more or cash out whenever you like. That's how perpetual swaps work. You can hold your position bet as long as you want and close it whenever you feel like it. How Bitcoin perpetual swaps work. Now let's get a bit more specific with Bitcoin perpetual swaps. 1. Betting on Bitcoin price. You can bet on whether the price of Bitcoin will go up long or down short. If you think the price will rise, you go long. If you think it will drop, you go short. 2. No expiration date. Unlike traditional futures contracts that have a specific end date, you can hold your Bitcoin perpetual swap position for as long as you want. 3. Funding payments. To keep things fair, there's something called funding payments. Think of it like a small fee paid between people who are betting on the price going up and those betting on it going down. If more people are betting that Bitcoin will go up, they pay a fee to those betting it will go down and vice versa. This helps keep the price in line with the actual market. Perpetual swaps DEX. What does DEX mean? First, what does DEX mean? A DEX is a decentralized exchange. This means there's no central company or authority controlling the exchange. Instead, everything is handled by smart contracts on the blockchain, so people can trade directly with each other without needing to trust a central platform. If you're enjoying this explanation and finding it helpful, don't forget to hit that like button. It really helps support the channel and keeps us motivated to create more content like this. And if you want to stay updated on all things Web3, make sure to subscribe. Now let's get back to our discussion. Why use a perpetual swaps DEX? Let's go back to our example of John and Mary. If they're placing their bet, or trading Bitcoin perpetual swaps, on a centralized exchange like a regular platform, they would have to trust that exchange to handle their money and the bet correctly. However, if they use a perpetual swaps DEX, everything is done through smart contracts, meaning there's no need to trust a central authority. Here are some reasons why people prefer using a perpetual swaps DEX. 1. Control of your funds. On a DEX, you keep control of your own money. No one else holds it for you, so there's less risk of someone running off with your funds. 2. Transparency. All the transactions are recorded on the blockchain, which means they're public and can't be tampered with. This makes the whole system more transparent. 3. No middleman. Since it's decentralized, you're trading directly with other people through smart contracts. There's no central exchange taking a cut of your trades or holding your funds. 4. Global access. Anyone with an internet connection and a crypto wallet can use a DEX. You don't need to sign up or hand over your personal information like you would on centralized platforms. Real-life analogy: farmers market versus supermarket. Think of a perpetual swaps DEX like a farmers market where farmers, traders, sell their goods directly to buyers. There's no supermarket, central exchange involved. The buyers and sellers negotiate directly and make trades using smart contracts, agreements. On the other hand, a centralized exchange is like a supermarket where everything goes through one big store. The supermarket handles all the sales, takes a cut, and holds all the products' funds until they are sold. So, in summary, Bitcoin perpetual swaps are like an ongoing bet on the price of Bitcoin, where you can profit from price movements without worrying about an expiration date. A perpetual swaps DEX is a decentralized platform where people can trade these swaps without relying on a central authority, keeping control of their funds and enjoying transparency. And that's it for today's lesson. I hope this breakdown helps you understand the world of Bitcoin perpetual swaps and decentralized exchanges a bit better. If you found this video helpful, don't forget to like, share, and subscribe to School of Dapps. Drop a comment if you have any questions, and I'll see you in the next video. Thanks for watching.